Hello friends, this is Raj Sastry from Raj Option Trading. Today I want to talk about spotting good stocks, in the declining market. So we got earnings these days. A lot of companies are announcing earnings, and few stocks are dropping a lot. Let's see if we can buy some of these stocks which are dropping, and spot some good entry points and good candidates. With that, I got some images here. First one is electric vehicle play. These guys, manufacture electric vehicles for special purposes. And then we got a F5 network. They have this secure network for any customers. And third one is CureVac, which is a vaccine company. They're also working on a COVID-19 vaccine, as you can see here. So with that, let's jump in. This is a list of companies here. We got about 20 companies in this page here, and I have sorted these by one-day performance. The one on the top has declined the most, and so on and so forth. And I also pay very close attention to the sales growth, and gross margin. So the companies highlighted have got good sales growth, whether it's 1 year, quarter over quarter, and also good gross margin. So those are my ideal candidates. Then if there is a high valuation, I kind of highlight them so that way we can pay attention to high valuation from a price to sales perspective. And I also highlighted, if there is a high short interest, I highlighted them so that way we also pay some attention there to see if it's a good spot to get in and buy. So with that, I got a list of 20 companies here. The first two companies, the Revolution and Atea, I think these are really a little bit of a counter trend type stocks. I would not recommend buying right away. The reason is they don't have sales growth, as you can see here, and 1 year performance is again hardly positive. And in case of Atea, as you can see here, it's a negative performance all along. But if you want if you want to be a contrarian, you can buy some, but I would not recommend at this point. But it's dropped a lot. I can easily see a quick bounce here if you want to just play the bounce game. So we talked about Pinterest. Pinterest, I think they announced the earnings, stock dropped. I think this is a good time to buy some Pinterest. And same story with the Enphase Energy, solid sales growth here and nice gross margin. I would buy on this weakness here and hold it for a long time. And then we got a couple other companies here, Rev Group. This is again a specialty vehicles, electric vehicles play. $18 stock, not too expensive. And nice sales growth, quarter over quarter, 4% here. Gross margin is also okay. If you look at the performance here, 1 year 129%. I mean, sorry, 1 year 316% performance. And as you can see here, they're dropping a little bit in 2 week, 1 week, and 1 day. I'm thinking, this is, I think they announced the earnings. I think they have announced it today, if I'm not wrong. But either way, I think it's a good play here, $18, and I think it's a good stock. Then we got Spotify. Again, stock dropped a lot, as you can see here. I think it may be nearing the entry point. Stock is a little bit pricey from a actual price perspective, but from a valuation perspective, it's not expensive. It's just five times next year's sales, which is not bad at all. And then you got F5 network. This stock I've been watching this for a long time. Every time there is earnings, if the stock drops, it's good time to buy. They will always recover. So with that, I think with the good sales growth and a nice gross margin, and they got about 42% performance in last 1 year. I think it's a good entry point to buy at this decline. Then you got JFIN here. It's a China-based company, $6 stock, and As you can see, a sales growth is negative, nice gross margin, and they've done 185% for 1 year. I think it's okay to buy on a pullback with the gross margin so high. If they improve their sales, I think they can make a lot of money. Then we got Elite Education here. I think they got a nice gross margin. I think they've got 1 month performance. Probably it's a newer IPO here. It's a nice performance here. I would give it this a benefit of doubt. It's a $6 stock. I think it's okay to buy on this pullback here and hold it for a while. CoStar, it's a high price stock, but as you can see here, 1 year performance is not that solid. So I would probably look at other places to invest versus CoStar Group at this point. Then we got Helen of Troy. I think nice sales growth here, nice gross margin, and also 37% performance. I think this is also a little pricey in my mind. Not from a price to sales perspective, but price of the stock itself is a little bit higher. So I would probably wait on this, given it's a little bit lower performance for 1 year. Then we got TIPT. TIPT, I think it's a good performance, as you can see here, 130%. I think it's as you can see here, they got minus 7% decline for the day. I think if you see closely here, I think they've done nicely, 143%, 159. So I think they declined from their 1 year. I mean, the 1 year is low, 6 months is higher, 3 months is even higher, and then they kind of declined as you go into 1 week and 1 day. I think there may be a play here. It's a $12 stock here. It may be okay to buy some, and keep it for a long time and take advantage of this decline. Then we got CureVac here. It's a German-based vaccine company. As you can see here, we don't have any sales growth yet. I think it's probably a little bit early stage. Nice gross margin and valuation is a little bit higher. Price to sales ratio is 100 plus. And nice 6 months growth here. I would probably buy this also on this weakness and hold it for a long time. Then we got Amgen. Amgen, what can I say about Amgen? It used to be a very nice company, but now as you can see here, 1 year growth or performance is just 0.40. But I would buy this on this weakness here. I think they announced the earnings, stock dropped. It may be okay to buy it on this drop. They also pay a good dividend. I think it's okay. And also if you look at here, some stocks here, Revolution Medicine, they got high, short interest. So stock has been dropping 3 month, 1 month, 2 week, 1 week, 1 day. I think soon these shorts will cover and buy back. So that could be start for this stock to go up. That can increase the stock to go higher. So I would probably with this high short interest, as it comes down, maybe in a day or two, I might start initiating a small position and see how it goes. And same story with Helen of Troy. I think they got high short interest and stock has been dropping 21%, 5%, whatnot. It may not be a bad idea to buy some if it drops a little more, and then you can sell it off later. So with that, let's go into next page here. We got a couple more companies here. YALA Group, it's I think a Chinese-based company operating in UAE. I think stock price is pretty low at this point, $22, and nice gross margin. And they got nice 6 month performance here, 165%. I think it's okay to buy some of this stock on this decline and take it from there. We got Chef's Warehouse here. Again, nice gross margin here, 22%, but sales growth is not there. I would probably, I think it may be okay to buy on the pullback because they got good performance here, 168%. I think it may be okay, but I don't see sales growth yet. but I think they got a good gross margin, good institution support here. We got Skillz here. This company has gone down a little bit in the last, say 3 months or so. I think it may be okay to initiate some position here. I I do see some sales, but I don't see sales growth yet. But it may be okay to initiate some position here, given low dollar price, low dollar stock, and it's got a high short ratio also. So as you can see here, it's done nicely for you know 2 week, 1 week, and now it dropped a little bit. I think it may be okay to buy some. And then we got RFP, Resolute Forest, Canada-based company. They're into the forest type products, and nice performance, 706% over 1 year. That's very nice. And they got good sales growth here, nice gross margin. I would buy this company. It's a good stock. Then if you go into PTCT, PTC Therapeutics, I think it's got 1 year performance is low. Probably, it's got nice gross margin, nice sales growth. It may be a contrarian play because stock has gone, like negative 19%. But if you look at the sales growth, it's very nice. Gross margin is nice. I think we could see a bounce in this. I think it could be good to buy some. And also, I did not cover this Inspire Med. I think this is also a good stock here. Done badly for the year, but these guys are doing some good work. I think it may be okay to buy some on the weakness and hold it for a long time. And also ALDX, I think these guys are done very nicely for 1 year, and now they have a little bit pullback going on here. Low price stock. It may be okay to buy this also on this pullback and hold it for a long time. Just take a note here. They don't have any sales yet. It's understandable for these early stage companies. Then we got Aaron's here. Aaron's is very steady Eddie type stock. They've been doing very nicely in the past. I think they've done 79% for 3 months. I would just buy this and sock it away. These guys are always chugging along and doing nicely. Then we got Spirit Airlines. Spirit Airlines is a reopening play. Even though company does not have too much sales, as you can see, negative sales, but because of the reopening interests, stock has done nicely for 1 year, 186%. As more and more people take COVID shots and want to travel, I can see this company stock going up. And then we got AMC, same story, recovery play, done nicely despite of negative sales growth. Novavax, I think it's a good stock. I think it's done very nicely for 1 year, 1062. Nice, sales growth, and both quarterly and yearly. Last but not least is Tenable Holdings. It's a $39 stock. Very good sales growth, as you can see here. Done 59% for 1 year. I think this is also a good stock to buy on this weakness. So with that, let's jump into few stocks and see how to decide to buy this stock or not. So first one is Revolution Medicine. Stock has dropped a lot today, as you can see here, and by looking at the earnings per share, looks like company is not producing any earnings yet. Probably they are investing too much into their own products. That's very understandable for these early stage companies. And from a sales perspective, I think this is a good picture here. They are doing nicely. 2020 they've done, 2018 they've done nicely. 2019 again nicely. 2020 a little bit lower, but it's manageable. But I see good sales growth here. Shares outstanding, I think it's pretty steady here. No big concern at all. It's a clinical stage precision oncology company. As these companies have to really invest a lot into their own R&D. I think that's why you could see earnings per share negative, which is understandable. And I think they are working on dosing the first patient. with the advanced solid tumors, looks like a noble cause here. And people are speculating and trying to think through, can they gain, can they do more? I think, it looks like Motley Fool is saying they're poised to break out, which is a good story. I think overall, by looking at the stock chart here, they always, as you can see here, they came down below the middle Bollinger Band, and came further down, went back up, went to the upper band, came down. Same story. Now they're fallen off of this lower band. I could easily see them bouncing back, just like they're dropped here, dropped here. Here also, I think they dropped just before earnings. I could see them bouncing back here, and earnings is coming around the corner, 5/13, May 13. So as we go into the earnings, because they've dropped so much, if you see here, dropped a lot, earnings went up, dropped a lot, earnings went up, dropped a lot, earning, and went up a little bit. I think you could see the pattern here. There's a very good chance after this earnings, the stock can make its way higher, at least go into this middle band and bounce from the middle band, using the middle band as a support level. So with that, if you look at the fundamentals here, the stock is $33.80, $2 billion market cap, which is good. Sales growth right now is negative. Gross margin is zero right now. High, short interest at this point. From a valuation perspective, price to sales perspective, little bit expensive. Dropped a lot in one day, done 14% for 1 year. So with that, I think it's a little bit counter trend play here. Stock has dropped a lot. It's a good clinical stage oncology company. Nice sales. Outstanding stocks are steady. I would buy some and take advantage of this drop. So with that, let's jump into next. And one more thing here, from margin perspective, it's a negative margin, as you can see here, but they've got a lot of cash. I would not worry about them running out of cash at this point, and it's very liquid from a volume perspective. No issues here. Insiders are selling, which is understandable. These type of companies, insiders sell once in a while. Institutions are buying the stock, which is very good. IV percentile is 98%. So don't think about buying call options at this point. But if you want to sell some put option, maybe below, maybe at say 20 25 or something, you could sell put option because high premium here. So you could take advantage of high premium, high volatility strategies, like selling a strangle, selling a put option, and even selling a buy, selling a call at a higher price. You could employ those premium selling strategies, especially because there is a high volatility here. And RSI is low, which is which is okay, not too bad, and earnings is around the corner. So with that, I think it's a good stock, good to buy and wait for a quick bounce back as earnings approaches. Next is FFIV. It's networking play. As you can see here, stock has done nicely. Every time the Bollinger Band contracted, here contracted went up, contracted went down, and as you can see here, around the earnings here, there's earnings, stock dropped, earnings, stock dropped. There's earning here, stock dropped. I think for these guys, whenever there is earning, these guys dropped many times. So I think I see this as nothing new here. It's the same old movie. I would buy this on this earning drop and take advantage of this drop, and wait for a good bounce back. So with that, from a earnings per share, these guys are making money, as you can see here, $5.05, and their sales has been steadily improving, which is a good sign. No issue here. You don't need to be worried too much. and the sales outstanding is pretty steady, or it's a little bit decreasing if you can see here, which is a good story. That's what we want to see. And these guys are into multi-cloud application for security performance. These are big network players here. And from a fundamentals perspective, again, their earnings, I think they topped the estimates. Outlook disappoints. I think they, did not give a good guidance for the future. And as you see here, nice sales growth here. I mean, can be improved, but it's okay. Positive sales growth, very good gross margin. Institutions are owning a lot of its stock, which is great. Short ratio is a little higher, but it's not too high. That may be the reason for this drop here. And they dropped. I think they've been dropping since last 3 months. It's kind of negative, but done okay for 1 year. I think this could be a good opportunity to buy and hold it for a while. And if you look at margins here, they're making money. Net margin is 12%, which is good. They got good earnings PE ratio, which is not too expensive, and very liquid. It's they got a lot of volume from a trading perspective. They got a lot of cash, $1.3 billion, and debt level is okay, not too bad at all. Insiders are selling, that's okay, and institutions are buying a little bit. IV percentile at this point is 0. That means even if you want to buy a call option here, maybe deltas 70 or so, you could buy because IV is low. And for this stock, probably it may not be a good idea to sell any premium, like selling put options or selling call options or strangles, because IV is 0. You will not make too much money. I think they already announced the earnings, so I think it's a good time to buy some stock or buy some call. So with that, let's jump into next stock here. It's a CVAC, CureVac. CureVac, as you can see here, this is a vaccine company. They've been investing heavily into their own product. That's why earnings per share is negative. Very understandable. It's these type of clinical stage companies, earnings per share typically is negative in the beginning. And from a sales perspective, they've been doing very nicely. I love this chart here. As you can see, nice sales growth here, which is what we want to see. Shares outstanding is steady, which is always good. And these guys are clinical stage biopharmaceutical company, and they do various mRNA type indications, which is always good. And I think these guys have multiple catalysts. It could send the stock upwards very good. I think they got some mixed signals. I think Martley Fool is thinking they have potential, but mixed signals from Wall Street. And from a fundamental perspective, I see they got $59 million in sales, nice gross margin, which is good. And from a valuation perspective, they're a little bit high from a price to sales perspective. And they were done, I think they were done nicely for 6 months, which is very good. And if you look at from a margin perspective, negative margin, like we talked about, the company is not making money yet. And I think they got a lot of cash. No need to worry about running out of cash. $1 billion cash and low debt. And I think from a IV percentile, I think right now we are not showing any IV percentile for this one here. And RSI is 64. I think probably it's a good idea to buy the stock. I think they kind of came down from a higher band of Bollinger. As you can see, if you look at the trend here also, after the earning, they came down. Went all the way to lower band, then bounced back. So I think maybe on this one, it's good to wait a little bit, see if they touch the middle band here, and if there's a bounce, then it may be good to buy. And stock price is little 118. It may be okay to wait a day or two and see if it stabilizes, or will it hug the middle band here. So with that, let's look at our next stock here. It's YALA, YALA, And as you can see here, stock has been doing nicely overall. They are, right now Bollinger Band is contracting, as you can see here. Something similar to what has happened over here. Bollinger Band contracted. RSI tried to, go up at the time, and it went up. Right now, Bollinger Band is contracting, stock is coming down, RSI is going down. So as see RSI kind of picking up a little bit, you could see stock will also go up. So at this point, I would watch a little bit. I think given the stock is at a low price, $22, it may be okay to buy some and hold it for a long time. Because I think it's okay type entry point. Stock had dropped 7%. It had done nicely for 6 months. I think it's okay to buy a little bit. Maybe don't buy whole lot, but it's okay to buy some, given it's kind of sold off, low RSI, and I think it's a good one. And from a earnings per share perspective, company is negative right now, just minus 1 cent here. And sales is good. I love this sales growth here. A nice sales growth trajectory here. Outstanding shares are constant. And these guys are, into voice-centric social networking and entertainment platform. So I think it's for North Africa region, which is good. And if you look at the growth here, there is a sales here 135 million, but I don't see any sales growth here. Nice gross margin. I think it's good. And if you look at the operating margin, company is making money at this point, 2.40%. And the volume is also positive, nice volume. It's a liquid stock. And institutions are buying 2.49%, which is good. And RSI is, it's, I think it's at a lower place right now. So with that, I think it's good to, buy this stock on this drop and hold it for a while. Next is RFP. It's a Resolute Forest Products based in Canada. Very nice looking chart. I love this chart. It's very steady eddy type stock, has done nicely. Now they just dropped off of their higher Bollinger Band, and they're trying to think through what to do next. So with that, looks like earnings is today for 2029. I did not see any earnings news on this. Given it's a $15 stock, it may not move drastically. This is a drop after probably after the earnings. So I think we will wait for a day or so and see if it wants to come down somewhere here, maybe around 14 or so. I'm willing to buy this at this price and hold it for a long time, especially because there's a good sales growth. There is a good quarter over quarter sales growth and nice gross margin. Good institution support here with the 86.30. And I think overall they've done 706% for last 1 year, which is very good. And from a margin perspective, these guys are making money, 0.40% net margin. From a price to sales perspective, I think they are not expensive. 0.5 is very cheap. And I think they got good volume here. It's very liquid, no big deal. Debt level is a little high for my liking. Maybe it's okay for this industry. They tend to be a little bit capital intensive. Um, I think insiders are selling some, institutions are buying a little bit. IV percentile is very low, so you could even buy a call option, maybe delta 70 or higher, or you could buy stock outright given stock price is very low, just $15. So with that, I would recommend this. They're into forest product, pulp, tissue, wood products, and paper. Next one and the last one is REV Group, ticker symbol RVG. I love this chart. It's pretty steady eddy type stock, pretty tight channel here. Now Bollinger Band expanded. Now it's kind of contracting again. And these guys are, I think these guys have done nicely. Probably they've done earnings. That's why stock has probably dropped, as you can see here, below the middle band here. And now it's trying to see which direction to go. And these guys produce electric ambulances, electric vehicles, specialty vehicles. And if you can see here, right now they're losing money. All these EV companies, they have to invest a lot into their product. That's why earnings per share is negative. Sales, I think it's a good sales. I think it's pretty steady eddy type sales growth here. Maybe 2020 was a little bit downer with the COVID probably, but I think overall it's a pretty steady eddy type growth here. Shares outstanding is under control, no big deal here. And if you look at the fundamentals here, sales quarter over quarter sales growth is positive, gross margins okay for a EV company, nice institutional support. I love this. And they dropped 12% in one day, and they've done 316% for 1 year. That's a very good performance. And if you look at the margin perspective, I think they're still losing money from a net profit margin perspective. They got some cash, a lot of debt. I think in the EV industry, probably people do take debt to produce vehicles. And I think from a liquidity perspective, they got a lot of volume here, which is okay. Insiders are buying, institutions are buying, which is a good sign. AVI percentile is low. That means you could buy call options if you want, delta 70 or higher, 3 months out, or you could buy the stock outright, given it's a low stock price, $18.38. So with that, thank you very much. Happy trading and investing.